Over the last 2 years, one company has become almost synonymous with AI investing, Nvidia. It has been one of the biggest winners of the AI boom. But what if the next big AI opportunity isn't Nvidia? Because the AI industry is entering a very different phase. Hey everyone, I'm Nolan. For the past few years, Nvidia has dominated the AI conversation through its GPUs and CUDA ecosystem. But as AI shifts from training models to actually deploying them, a bigger question starts to emerge. Could the next wave of winners look very different from the first? If you look back at the last 3 years of AI development, the entire industry has been chasing one goal. Everyone wanted to build bigger, smarter, and more capable AI models. Whether it was GPT, Gemini, or Claude, they were all competing in the same race. Whoever built the most powerful model had the best chance of leading the next generation of technology. And to make that happen, there was one resource that mattered more than anything else. That resource was compute. And demand for high-performance GPUs exploded as models became larger and more complex. Not surprisingly, Nvidia became one of the biggest beneficiaries of that trend. Virtually every leading AI lab relied on Nvidia hardware to train its most advanced models. But Nvidia's real advantage wasn't just its chips. It was the ecosystem built around CUDA. And now that many of these models have already been trained, the industry is starting to ask a different question. I think a lot of investors are still looking at AI through the lens of the last few years. Back then, training models was the opportunity. But as companies focus on deploying AI, serving customers, and generating revenue, the center of gravity is beginning to shift from training to application. And that's usually where new opportunities start to emerge. A lot of people treat AI as one giant market. In reality, training and inference are two very different businesses. Training is like building a massive piece of infrastructure. Companies spend huge amounts of money up front to create the most powerful model they can. Inference is different because it happens every time someone actually uses AI. Every prompt, every search, and every generated response requires computation behind the scenes. More importantly, those computations never stop. For platforms serving millions of users, inference can happen billions of times every single day. That means performance is no longer the only thing that matters. Controlling costs and improving efficiency become just as important, if not more important. Put simply, training is a performance-driven market, while inference is an economics-driven market. That may sound like a small distinction, but it changes the competitive landscape in a big way. And whenever the rules change, new winners can emerge. For years, investors believed that GPU shortages were the biggest bottleneck in AI. And during the training boom, that was absolutely true. But as AI applications move into the real world, companies are discovering something else. GPUs are only one piece of a much larger system. Network bandwidth, memory capacity, storage infrastructure, and power availability are becoming increasingly important. All of these factors now play a role in determining overall system performance. Even if you have the most advanced GPUs available, the system can still be limited by other constraints. Because real-world efficiency depends on the entire stack working together. It's like owning a Ferrari and driving it through heavy traffic every day. The AI industry is running into similar challenges, and new bottlenecks often create new investment opportunities. For investors, the most valuable opportunities are rarely the problems everyone is already talking about. They usually come from identifying the next bottleneck before the rest of the market does. Another major shift is happening at the business level. The priorities of the industry are starting to change. During the training era, performance was everything. The company with the most compute usually had the strongest competitive position. But in the inference era, companies are asking a different question. How do we turn AI into a profitable business? Imagine two models with only a 5% performance gap, but one of them costs 50% more to operate. For most businesses, that cost difference matters far more than the performance difference. which is why efficiency could become a much bigger competitive advantage than raw performance. At the end of the day, markets care about profits, not parameter counts. As AI moves from a technology race to a business race, efficiency becomes increasingly important. And that's exactly why the inference era could open the door for a new generation of winners. If we zoom out and look at history, we've seen this pattern many times before. Technology revolutions rarely create the same winners in every phase. In the PC era, Intel became a dominant force because it controlled a critical piece of the computing stack. Almost every personal computer depended on Intel processors. Then came the Internet era, where companies like Cisco became essential infrastructure providers. Later, the mobile revolution helped turn Apple into one of the most valuable companies in the world. When cloud computing took off, Amazon built an entirely new competitive advantage through AWS. Different era, different leader. As industries mature, investor attention tends to shift from technological breakthroughs to commercial execution. That's why the winners of Phase 1 are often not the same as the winners of Phase 2. When you look at history, one thing becomes pretty clear. As technology enters a new phase, the market often rewards a new set of winners. That's why I believe Nvidia won the training era, but the inference era could create new opportunities. I'm Nolan, and I'll see you in the next one.